All righty, everybody. Welcome to Talking Real Estate here at Champions Real Estate Team at Berkshire Hathaway Home Services Ambassador Real Estate Company. My name is Mark T. Wehner, the team leader here at Champions Real Estate Team. We jump on every Thursday or every Wednesday over the lunch hour and kind of give you a rundown of what's gone on over the market in the last week. Also joining me as always is Russ Williams with Williams Mortgage. He'll be kind of giving us the insight on what's going on in the mortgage industry, if there's any changes over the last week. So we'll jump right into it here and take a look at the numbers. So the weekly numbers, we've had 462 new listings going live this last week for your viewing pleasure. And then we had 389 contracts written this last week and 515 sold homes. So in perspective, just looking at this one little chart or diagram here, the market is basically staying similar to the weeks previous. And my take on that is essentially, school's back in session. People kind of taking a little bit of a break from, those home buying, looking at houses and stuff like that. We're not seeing the crazy numbers, but there still are buyers and sellers out there. Sellers are going to sell their home, buyers are going to buy. And if you are a buyer, the market is still very strong, but it's more of a balanced market. We're not seeing the crazy amount of offers. We're still seeing good, fair prices. Prices necessarily haven't come down a whole lot, but the competition to get a home is kind of tapered off. So if you're, still in the market, or you went to the fences, over the summer, with how crazy the market was, now's the time to maybe get back into it and see what's out there for you in that perspective of it. So looking at the bigger picture of it here, we are up slightly and just under 1,700 homes in the active MLS that you can go look at in the Omaha and Lincoln MLS. Since we're in the Omaha metro area and the surrounding areas. In Douglas and Sarpy County, we have 924 active listings. When you break that down in a smaller realm between the existing homes, we're just under 600 homes. And new construction, we're hovering right around that 330 mark, which is pretty typical. Obviously, it's less than, we're still about 20% less homes on the market than we were this time last year. So the inventory is still very low, so it's still a seller's market. What we're seeing, on the ground level, buyers are very particular. They know that they're paying a premium for a house or top dollar for a home. So they're wanting that house to be, move-in ready. And if it's not, to be priced accordingly. I think some sellers out there realize that it is a seller's market and they are, looking at houses that are, the price is really high. And they're just saying, well, it's a seller's market. My neighbor down the street got $30,000, $40,000 more for their house. But that market was those contracts were written in May and April, closing in June and July in that aspect of it. So we're in a different market time than we were back then. So those are things to take into account if you are thinking of selling your home. I've chatted with people thinking about getting their homes on the market, next spring. Now is a great time to do that so that we can come in, some of our Champions Real Estate Team can come in, walk around your house, get a good idea of what needs to be done, what you should do, what you may, want to do, and we can kind of go over that with you, and get a good game plan together. Or if you're like, I don't want to do anything, what's the price as it sits? We can do that too, and get the house sold for you. From a buyer's perspective, going through the fall time is a lot of times when people take breaks. Now is the time to kind of keep the foot on the gas pedal. Make sure you have a plan in place. Make sure you've met with a lender like Russ to get your purchasing power down. If you need to sell a house to buy a house, maybe have that contingency, maybe a little bit more lax now that a seller may look at that, more favorably than, a couple months ago. So those things that you kind of take a look at. But other than that, the market's still very strong. Nothing really too new from the last week, but that's kind of where we're sitting at from the real estate side of it. I guess we'll jump in with Russ and touch base with him on the mortgage side of it. So.
Mark, interest rates have held steady for yet another week. We do have some important news, though. There's a Fed meeting that's going to be going on very shortly here that, at least as of the last meeting, 7 out of the 10 Fed governors had thought that we should start to taper the purchase of mortgage bonds. And if that continues, we could see interest rates rise. What that basically means is tapering is the reduction in the Federal Reserve Bank program of buying mortgage bonds. And when you see that reduction in demand with the Fed not buying as many bonds, that could push bond prices lower, bringing yields higher, and interest rates could move up accordingly. We don't know exactly what they're going to say, so we'll be listening very closely to their press conference as well as waiting their minutes when they release those to determine what they will do. But still, to your point from earlier, it is a great time to finance purchase of a home. Home prices, we've seen those obviously very strong throughout this year, but we're seeing a little bit less demand that we were seeing earlier in the year, and that's partially driven by back to school and whatnot. So if you didn't win a bid on a house earlier this year, be sure to call Mark and his team. This is still a great chance to buy a house and take advantage of interest rates before we run into the risk of those rates possibly rising.
Yeah, and I know last week, if you didn't catch us last week, I know you talked about that on September 18th or that week of with the credit scores, instead of just looking at the lowest credit score of the co-borrower, that they're looking at doing the average of that. So that's something too, that maybe if you were an FHA, buyer in May, maybe now with that credit score kind of changing those parameters, you may jump into that conventional, which is a little bit more attractive, to a seller in a multiple bid situation. And, if I'm always more favorable to the conventional loan because you're putting more money in your pocket. You're not paying that upfront funding fee basically to pay Uncle Sam to get that loan. So you're putting a 1.5%, of your money back into your house savings account rather than giving it to Uncle Sam. So that's also a very huge benefit in that when we talk about home ownership, building that wealth, building that equity into your house. So that's something that we touched on last week that just kind of want to reiterate that if you we're on the fence or we're in an FHA financing, maybe now's the time to get in touch with Russ, and he can at least get a game plan for you. I know some people say, well, we're going to wait till more houses come on the market, next spring. Well, as Russ just touched on, depending on what the feds do, if they're not buying those mortgage-backed securities, that may push interest rates higher. I don't see prices going down to, anywhere in the near future, just with the sheer simple fact of supply and demand. So if you can get into a house now, where a house may be at 250 today, next spring it may be 275. If interest rates go from 3.25 to 3.5 to 3.75, your purchasing power is going to be reduced significantly in that aspect of it. So just our goal here is to basically coach you and educate you so that you can make the best decision financially, and for your living arrangements in that matter, what's, a house that's going to be best fit for you. So, but I think that's kind of all I had, try to keep it short and sweet. Don't know if you have anything, Russ, at all.
That's it. Yep.
Yeah,
It's good,
awesome.
good week to buy a house, folks.
Yeah, right. Weather's supposed to be nice and all that good stuff. So anyways, if you have any questions, give me a holler. Mark Wehner II, 402-672-7670. Mark.Wehner, the number 2 at BHHS AMB, or you can give Russ Williams a holler as well to get your mortgage stuff ironed out at 402-290-8936, Russ at WilliamsMortgageLLC.com. And we look forward to seeing you guys again next week. As always, if you have questions, comments, topics you want us to cover on, comment. I know we're going live on my YouTube channel, LinkedIn, as well as Facebook. So we got a bunch of different platforms. If you're watching this later, appreciate you watching. And if you have questions or anything, you can reach out to us directly or comment on those. We'll keep tabs on those sites as well. So take care and have a great rest of the week. And